All right, hello everybody. It's Luther Wilson III here again on a video recording. It is Monday, July 15th, 2024. Hope you're doing well. All right, so in today's session, I want to talk about real estate financing, especially in regard to real estate investors. Okay, so as some of you might know, I am a real estate broker and real estate investor here in the Kansas City area. I've been in the game for over a decade, serving investors in one way or another and investing myself and with partners too. And during this time, I've learned a lot working with, as a property manager, working with a lot of contractors and working with, pretty much everyone in the real estate space for our transactions and so forth. And a big thing that I've been emphasizing lately, and a big thing that I have been diving into a lot lately, is the financing piece. And it wasn't until I found a capital investor, a business partner in 2019, and we started looking at how we could leverage some of the capital that he had and a little bit that I had at the time. And we were forced to look at the different types of funding that's available for real estate investors, because we only had so much that we could utilize. And we needed to figure out how we could leverage that in order to purchase, renovate, refinance, and keep properties for the long term, because that was our goal, or our intention from the beginning, was to buy properties and keep them for the long term as cash flow investments. And so that got me on a path of talking to dozens of lenders and financiers and potential capital backers, and having lots of meetings with them, Zoom calls, phone calls, and so forth. And my business partner and I filled out several applications and really started to figure out how we could make our investment operations or our investing business more efficient. And so, which leads to today, where I feel like we have a very good investment model. Kudos to my dad, is one of my mentors who's taught me a lot about real estate investing and creative financing. Big shout out to John Burley as well. I've been to a couple of his events and have learned a lot from him and his students as well. These two guys have been in the real estate investing space for the last 30, 40 plus years. And so today we've been able to utilize what we've learned, or what I've learned from those gentlemen and their students, what I've learned from colleagues, associates, and clients over the last decade or more, and keeping all of that in mind with what is happening in today's market, second quarter 2024, specifically, our specialty, B-class, some C-class single family homes in and around Kansas City, and how we can continue to move forward acquiring properties and growing our portfolio. And so the financing piece is key. And I was listening to a podcast or watching a YouTube video, I think it was 2 or 3 months ago. And a gentleman by the name of Leon Johnson was being interviewed by another guy named Steve Trang. I recommend you look up both of those guys. Look at their content, incredible real estate professionals and investors. Okay, so Leon, during that interview, made a statement that really resonated with me. And it goes a little something like this: what makes a good long-term investment is good long-term financing. All right, and let me run that back. What makes a good long-term investment is good long-term financing. All right, and so when you think about real estate, think about financing in general, you got short-term funding, which is going to need to be paid back usually within 6 months, 12 months, maybe 18 months, okay? That's the short-term debt. It could be hard money, it could be private money, and usually it's interest only. And there's a balloon at that end date, whether it's 6 months or 18 months, and all of the money that was borrowed needs to be paid back, okay? That's short-term debt. The medium term, you might be able to get some type of short-term financing, or that, you know, could potentially need to be extended out to medium terms if it doesn't, you know, necessarily work out as planned initially. But there are loans out there that investors can utilize that may have a 2-year or 3-year or 5-year balloon. It could be amortized over 20, 25, 30 years, but the balloon at the 2, 3, or 5-year mark, or there might be an ARM, an adjustable rate mortgage, that needs to be, or that, you know, the interest would fluctuate at that 2, 3, or 5-year mark, okay? And I refer to that more so as medium term. And then of course you got the long-term financing. You have non-qualified mortgages, you have qualified mortgages for investors, and then you have seller financing, which there's existing financing that investors can take over if it's a situation where the purchaser or investor can negotiate with the seller. The seller of the property may carry the financing, you know, fully amortized for 10, 20, 30 years. And then you have the financing that you're going to get from a bank or from a mortgage company. That will be the non-QM or the qualified mortgages. The qualified mortgages are mortgages that are backed by the government. You got Fannie Mae, Freddie Mac, and then there's VA, there's FHA. Don't want to get into too much on that, because the main ones that investors tend to use as far as financing, whether it's short-term, medium-term, or long-term, is hard money loans or private money that's on a short-term basis, and then the non-qualified mortgages, the non-QM loans, which when most investors or most people look up or consider non-QM loans, one of those is DSCR, which stands for debt service coverage ratio, okay? So having a general understanding of this, talking to a loan broker or a bank or a financier or some type of capital investor or all of the above, I truly believe is going to help investors out. It's going to help you out if you are currently investing, or if you're aspiring to do so, and if you're looking to grow an investment portfolio, ideally one for the long term, because I think deep down, most of us investors, and really most of us real estate professionals, deep down got into real estate for a number of reasons, right? Probably wanted to make massive income, or we wanted to make passive income. And at the end of the day, we're not getting any younger as time goes on. The passive income is what I truly believe is what most of us desire, or a lot of us desire. So as investors, how can we make that happen, all right? So much emphasis gets put on finding a deal, and more often than not, those deals or those properties are going to need significant repairs, all right? Those are the cheap properties. There's a lot of those out there, okay? Then from there, if you can find those deals, and a lot of us end up, you know, going that route first as a realtor or an assigner or wholesaler, because we need the experience. We may not know any better. We may not have access to a lot of capital quite yet. So finding a deal is a great way for us to gain experience and learn the ropes. And that's great. You can find deals and you can present those to investors. You can assign that property. You might be able to source some type of capital or do a joint venture partnership type of agreement, but it's going to be a little more challenging, a little more tricky, I would say, if you try to do it that way. So if you're able to, and what I'm encouraging myself and my partners and my customers and clients as well, is look at how we can source capital, while you're doing your business, while you're doing whatever it is that you do, looking for deals and so forth. Truly encourage you to look at the financing piece and how you can blend the two together, because if you have a solid investment model, you got the operations down somewhat well, and you tie that in with the capital, whether it's private equity, private capital, even if you have to go the hard money route or the short-term financing route, and then getting into the long-term debt. Gold standard, I believe, is 30-year fixed rate mortgages. Tying that in together somehow is going to allow you to more efficiently to be able to grow your investment portfolio and get the passive income and the cash flow for years to come that I think most of us truly desire. And so keep me in mind. It's Upside Property Services, Upside Capital. Two big things that I've been focused on lately, besides growing my own investment portfolio, is helping investors with their seller finance transactions, mostly as a resale. On some occasions, I can help an investor if they're acquiring a property utilizing seller financing. And the other big thing that I've been helping investors with the last year or so has been helping them source and secure financing, okay? Over the last year, I've been able to help 10 or so investors. Most of those investors, 8 of those investors out of the 10, me and my referral partner were able to help them successfully do a refinance, all right? And I think all of those investors have kept the property and it's performing and cash flowing. Of those 10, 2 of those investors, we were able to assist them with purchases and renovation projects, okay? And we were able to get them financing 12 months with better rates and terms than what most hard money lenders and private money lenders are offering. So keep me in mind for that. At the end of the day, again, if you can figure out an investment model that utilizes long-term financing from the beginning, okay? Every now and then, you'll be able to use seller financing for an acquisition, whether it's taking over the existing financing or some type of seller carryback. But I truly believe using the non-qualified mortgages, okay, I might have to take a deeper dive on a future video about non-QM loans and how my partners and my clients have been able to utilize it effectively. And then I might have to plan on doing it in a separate video. I don't want to get into it now on our specific investment model that we are utilizing today in the Kansas City market on B-class and some C-class single family homes. They are producing cash flow. We're able to keep these properties for the long term. All right, so that's all I have for today. Appreciate your time. Stay blessed, y'all. Peace.